What's going on, traders? Welcome back to another live stream here. Today is Wednesday, March 19th. My name's Zach. This is Real Deal Futures. Before we jump onto the charts, make sure you read what is on the screen. Trading's risky. Most traders do lose money. I'm not a financial advisor. None of this is financial advice. I'm just an idiot from YouTube. Nothing you see or hear from me here or anywhere else in my content is a suggestion or recommendation to do anything at all. Do your own research. Make your own trading decisions. Also read CFTC Rule 4.41 on simulated trading, which is what this is, even in funded prop firm accounts, and the affiliate and partnership disclaimer that says I stand to make money from links in my content. Now, I'll get through that one day without getting tripped up. You think I'd have it down by now? Let's go ahead and jump onto the charts. The market is open and moving. We are here on Topstep X, the Project X platform. I have 4 XFAs being copy traded. We are going to be checking out ES, specifically MES, the micro ES chart, on this beautiful Fed day. We'll talk about what we have coming up as far as news. But yeah, before we jump right into this low time frame, I like to take a look at the daily, just get a feel for what's been going on. I'll save you with the super high time frame analysis. We'll kind of just take a look at the last few days here. As the market has been, just making sure you guys can hear me, as the market has been finding a little bit of buyers down here after some gnarly selling. We pushed up day over day from here to here. We had a bearish bar form yesterday, really without blasting through the prior day's low from the 17th. Today we are opening up with a pretty small daily candle so far, kind of chopping near the highs of the profile from yesterday. I just want to take a look at my chart and make sure I have this marked up well. Yeah, so looking at yesterday's regular trading hour profile, volume profile, we sold off pretty aggressively. We kind of sold off, into the open, trended to the downside. We did come back above VWAP here, and then for 9:30 we sold off pretty aggressively, and then we chopped. This was a really choppy, difficult to trade day. These have turned into 2 classic pre-FOMC days where we just have a lot of consolidation, a lot of chop. We had a lot of it here on Monday, a lot of it here yesterday. I saw a lot of blown accounts, a lot of guys struggling, and it's unfortunate, but not terribly surprising. It doesn't always happen. I don't go into these trading days before FOMC and say, oh, I'm not going to trade anything because it's just straight chop. But if I start to recognize this, like I didn't get a trade in yesterday on Monday at all. Yesterday we took a win, small win, and I didn't get another setup. We spent a lot of time just kind of hanging out, chatting. And I'm glad that I didn't try to find another opportunity, because on the 5-minute chart, this is ugly, man. This is really ugly. So outside of that, looking at where we're coming into today, we pushed up after the close, brought back down to VWAP. We found some sellers into London session, cracked back up above VWAP, and we are opening up to the upside here for NYSE session. So we'll drop down to the 1-minute time frame, my preferred time frame here on ES. We also are dealing with rollover this week. We are on the June contract now. It's roll week. Yesterday was the first day on the fresh contract, so that can generate some tricky. Just want to make sure my overnight high is in the correct area. Yeah, that can generate some tricky price action and market structure as well. So we are opening up to the upside, right? We've got majority of the trading that took place yesterday down around this area. We got a lot of volume down here. If we just look at a zoomed out 1-minute volume profile, temporary volume profile here. This is the visible range volume profile. We have the volume profile from yesterday. Been paying attention more to that, along with VWAP and the levels that I've been using for quite a while. But quite a volume down here, right around this temporary volume point of control, the volume point of control from yesterday. But we're cracking the upside here. I'm cautious that we just chopped today. Again, I'll talk about what I mean by this FOMC rate coming out, the news. We have, good morning chat. What's up, guys? What's up? Hello, Wolf. Jordan, what's up? Good morning, guys. Good morning. Appreciate you being here live with me, hanging out, seeing if we can't navigate these markets. Try not to do anything too crazy. So this is forexfactory.com. You could use any other news site that you want. Financial Juice, Market Watch. There's like 100 of them. But here's what we're talking about. Federal funds rate, FOMC rate is coming out at 2 p.m. That is traditionally a large market mover, right? And so I don't try to predict whether or not the market's going to go up or down on this rate. I don't try to forecast, what it's going to be and then how the market participants are going to react. I'm just aware that we're likely to see a large increase in volatility right around that time. Along with that, right after that, right as it starts to cool down in 30 minutes, we have Jerome Powell speaking. We have a press conference where he reads a statement, essentially, and then, if I'm thinking correctly, he answers some questions, which can send the market even further into a loop. So, I like to be cautious, and I traditionally don't trade through an FOMC rate, and I don't trade, through an FOMC conference. I'm not going to trade through unemployment or, NFP or anything like that, large, high-impact news events. But along with that, a lot of what we see traditionally, right, if you just go back through and look at simple pattern recognition, is before a large news event like NFP or FOMC, where we don't have a lot of news on these days leading up to it, we may see some consolidation. We may see some choppy market conditions, kind of like what we saw for regular trading hours, although we did get large movements into the afternoon. And this might be exactly what you want to trade. Like, you might be a range trader and cleaned up here, right? Like, I'm not going to say this is difficult for everybody, but oftentimes we do get some consolidation. We get some chop, we get some back and forth. Market seems to be waiting for the big information to come out, to be digested, and then make a decision and actually start to, head higher, head lower, accept higher or lower prices. So for those reasons, I don't not trade. I don't say it's a terrible day to trade. I'm not going to spend time on the charts, but I'm a little bit more cautious. I exercise just a little bit more of this bias that we may be more likely to chop around, just kind of consolidate, and not have this big day. If a big day starts to develop, I'll put risk on, right? If we start to get some trends, start to get some direction like we did yesterday, I'm going to trade. But as we start to chop and consolidate, I'm not going to be the first one hammering in there trying to buy off the highs and sell off the lows, because I'm aware that we might see that kind of choppiness and consolidation. So that's kind of my thought process coming into today. I don't have a really strong bias. If we start to move one way or the other, or I find a trade setup that, is making sense for me, the simple way that I trade ES here with you guys almost every morning, I'm going to take it. I'm going to look for the trade, but I am aware that later on today, big financial news. Oftentimes we just get choppy, rangy consolidation, low volume, just like not a lot going on leading into that. So let's see what ES starts to have for us, starts to develop here. Again, opening up above VWAP, cracking overnight high. We are, above really all of the session volume profile from yesterday, regular trading hours, but we are low in the total daily candle, right? Prior day high is way up here. We are not too far off of prior day low, overnight low. We start breaking that to the downside, we could have some room to go. Just going to take a look to see if I have a zone or something that I'd want to throw in here on the way to the upside, because I got rid of a handful of things on my chart. Yeah, I'm gonna try to find just a discretionary level here, right? I don't have something massive that I would want to trade off of. That's an objective level. I'm gonna say if we start to break to the upside, where's the next area that I think we could reach? It's going to be off of, these highs and these lows, and also looking at the volume profile. That would be really wide. I think we would come through this 5,700 level, but I'm going to put a zone right here, marking off this 5,700 level. Again, why, right? Tested as resistance multiple times with big impulsive moves. Tested, a couple of times here right before we sold off into, into the morning session. I think if we got up there, we are likely to move higher, just into this area of high volume, right up here. But this is in line with a big psychological round number, 5,700, so I like that as well. Down below price, if we start to sell off, I have this zone down here. What is this really coming off of? Yeah, it's my stuff from yesterday. I'm fine with that. If we start to break these lows, I think we could find buyers quickly below here. But just as easily quickly move down to this level that was tested multiple times before big impulsive moves. Simple price action, market structure, nothing crazy. Don't need to reinvent the wheel. But what's going on, guys? Good morning, Ryan. Good morning from Melbourne. What's up, Daniel? What's up? What's up, name that I can't pronounce? Wolf, what's up? Not a troll question. Why do you trade the 50Ks instead of the 100Ks or the 150Ks? Absolutely. Rusty said, I will answer that, Wolf. Rusty says 57.20 again. Ooh. We got a call out from Rusty. Rusty says we're cracking to the upside, and he's looking at 57.20. Ooh. Yeah, I mean, I could see it, right? I could see it if we kind of, continue this trend to the upside. This is a pullback down to this area of high volume, and now we're going to continue. And even looking at the volume profile, somewhere up there near like the 10s or the 15s, I think I'd be a little bit more cautious holding above that, but could certainly see that as a pop to the upside. I'm curious if we start to continue above overnight high. I'm going to look long. That's my game plan. Back down into this area, I'd love to see a retest of this first before that, just because if we are going to chop, I think that's what we're going to return to. We return there and then come all the way through highs. I'd be much more confident taking it, but I'm going to wait to see how this starts to develop. To the downside, this is kind of dicey, just trading within this. Low time frames, are going to help me out here and maybe give me a way to structure risk. Look to grab a small trade, but I wouldn't mind a pull all the way back down here, Rusty, first. Right to this again, temporary volume point of control from yesterday on the 5-minute chart, looking at that volume profile, and then like a continuation of the upside. That would be pretty sweet. That would really tell me, hey, pre FOMC, where's my tool? Pre FOMC, we are potentially going to continue higher and push to the upside. That'd be a lot to ask for, but here we go to the downside right now. So again, not looking short on this. I think we can easily pull down here. It would be pretty early to take this 942. And again, I think we might just pull down here and then, crack back up. So this just really isn't a setup for me yet. Gonna wait for some more structure to develop. Looks like we might want to move lower first. We got a lower high that's put in. Buyers failing to take it higher. Cracking back down. I think this is the area that we come and check out. The 5670s to 65s. Somewhere down in this level, if we're going to continue lower and we don't just find buyers right here. I really wouldn't mind. A really nice directional trade would be a pullback down here, aggressive buyers step in, say we are not continuing lower, and we pull back up to the upside really, really aggressively. I wouldn't mind a buy out of that, but I'm cautious that we just returned to this level and kind of chop today. So again, today for me, pre-FOMC, not a day that I want to slam trades on. I watched the last 2 days where I stayed patient, happy I did here with you guys, right? And, I don't need to just give it all back in choppy conditions, right? That's not what we need to do. So let's kind of watch how this starts to develop here. But Wolf had a question. So why the 50Ks instead of the hundreds or the 150Ks? Here's my answer there. And this is pretty specific to Topstep. When you go to take the evaluation, there's multiple reasons. But first, we're talking about Topstep. When you go to take the evaluation with Topstep, when you look at your max loss limit, your risk capital, relative to the profit target that you have to hit, the 50K is significantly better. It's significantly easier. You have to make $3,000 with a $2,000 max loss limit. You only have to make $1,500 twice, while your max loss limit is $2,000 with an end of day trailing drawdown. If you look at the 100 or the 150K, and I'll talk about the 150K for example, you have to make double your max loss limit. So you have $4,500 as risk capital. You have to make $9,000 in profit to hit that. Along with that, the price that you're paying all in, this gets a little bit toned back, but you're paying more relative to your risk capital when you start that evaluation. How does that work out? Well, you pay $49 for $2,000 of risk capital, or you pay $150, triple that, for $4,500, not for $6,000, right? So for those reasons right off the bat, I found it much easier to get right through the 50Ks. I'm actually copy trading one 150K in here. I went through some of the 150K accounts. I was on a hunt to really start to pass them. Invested quite a bit in failing a lot of them, just being really, really aggressive and not really recognizing how much more difficult, how much more profit you had to make relative to that risk capital. So I didn't stick with it. And when I came back to the 50Ks from the 150Ks, it's like the game is in easy mode, way easier. So for those reasons right off the bat and the ability to copy trade, I don't mind the 50Ks. Now, the 150Ks, the larger accounts, do have some advantages, right? Here's the obvious one. You get more risk capital. So when you get into an XFA, it's easier to turn a profit. You do have more room to work with. You're also able to take on larger size. If you are a big trader, you're going to scalp with, really heavy size. You are limited in the 50Ks. Along with that, you have to put up $200 days, $5 $200 days, right? Ooh, big volatility to the upside. Hang on one second. Let's watch this. We'll continue. That's a good question. Big volatility to the upside. Looking at Bookmap here. Wow. We actually came up and traded into where that algo was. I don't know if it jumped out of the way quick enough. But we do have liquidity up at 57.10, all the way up at this level, right? Rusty, that we're talking about, right up here. 400 some odd lots on the book, man. So we came down, tested value area high, to the T. Really tested in VWAP. This is looking strong. While I would have liked a pushback, a test right down to this area of high volume where volume point of control is from yesterday. If this resets, maybe we'll get to see it. Come on, volume profile. There we go. This is just might be all we need, and this looks like a crack to the upside. If this continues, I do think we are headed higher. I don't have a way to get into this now. Not taking a super aggressive buy, anticipating a massive volume candle to the upside, but something is driving the market higher, at least for right now. Let's see if we get some continuation to the upside. That was quite a bit of volatility. Yeah, this is going to be difficult. Not going to present a really nice way to get into this, right? I have no way to place a stop loss on this. To me, that makes sense. If I wanted to trade this for continuation of the upside, it just is going to make for a ridiculous risk structure. Not able to do it. So that just disqualifies this as a setup for me. There's nothing here for me. Would need a pullback down and then a continuation and some way to structure risk. We got a knife to the upside. It's not my trade. This does look like we want to continue. Again, we have liquidity building up above price. Everything we've come into so far as we just cracked higher. We had some at the 92s, right into the highs of this candle, the 94s. We've really been filling. And again, we have quite a bit on the book up here. I'll show you what I'm talking about. Make sure you guys can see this. This is Bookmap. This is my order flow tool that I look at over on the side. We have quite a bit up here. Really not too much down below. So I think if we continue, we are likely to come through that area of orders, 400 some odd orders on the book up there for ES. So this could get interesting. I'd like a pullback for a continuation, but don't know that I'm going to get it. Again, no expectations for today. Just going to keep it relaxed, wait for my setup, wait for the market to come to me. If nothing comes to me, I'm not going to force it. Last 2 days, I think, could be very, very difficult if you were really pushing it and dealing with really choppy conditions. I think we could see that. I think we'd see that again. Yeah. So Wolf. So for those reasons, that's why I prefer. We're just, for anybody that just hopped on, we're talking about differences between account sizes. For those reasons, I like the 50Ks over the 150Ks for Topstep specifically. There's other reasons. Again, double-edged sword, right? Both are going to have advantages. What I was saying is when you get to the XFA, I think just arbitrarily, everybody would like, what's up, Jess? Good morning. Everybody would just like to have more room to work. So if that's your deal, go for the 150Ks, no problem. You're spending more on the front end to get into them. They're harder to pass. And, that's a deal that I decided for the 50Ks. Plenty of room to work for me if I'm keeping it small, especially in copy trading. Along with that, if you look at something like Tradeify, for example, right? Here's the deal with Tradeify and why I went with the 50Ks in Tradeify as well. where initially I was like, oh, no brainer, I'll just get the 150Ks, right? Like I'm confident in my trading, I'm happy to spend more money on them, I'm right into 150K, more room to work, all that good stuff. With Tradeify, this is a big consideration. You have to make a certain amount of money before you withdraw. So you don't have a $200 per day deal. You have a consistency rule, 20%, and you have a minimum days to pay out, which is 10 days traded. Not $200 days, but just any days. But you also have a minimum balance before you can take a withdrawal. And with the 50K account, you have to make $3,000 before you can take a withdrawal, and you're allowed to withdraw up to $2,000. I think they were going to adjust something on here, but this is the way that I understand it so far. Let me actually pull it up on the side. And if you're in the 150K, instead of having to make $3,000 before you can withdraw $2,000, you have to make $9,000 before you're able to withdraw $3,000. So for that reason, although you do have, much more room to work, you have, larger drawdown, you're able to take on larger size if you want to, you have to make, considerably more. Yeah. So the payout number one goal, right, for your first payout, because it adjusts, it gets easier. For the 150K is 9,000, and you're able to withdraw on that first payout 3,000. So I like the numbers that I only have to make 3,000 to withdraw 2, rather than make 9,000 to withdraw 3, even having a tighter room to work. So again, this is going to be different for everybody. Some guys are going to say, that's fine, I want more room to work. Some guys are going to say, I want to spend less money and get into the smaller account quicker and be able to work towards payout quicker. But for me, I also did start with the 50Ks. I just spent a lot of time with the 50Ks first, so probably have a preference there. But for me, for all of those reasons, it's been a no-brainer just to work in the 50Ks. If I was going to continue really heavily with Topstep and, just kind of keep doing what I'm doing, I'd probably just spend more time and money and get into more of the 150Ks. Like I said, I do have one activated 150K. It's actually copy traded right now. I'd probably get into more of them. I don't know that I have any on backup. I think anything I have on backup is a 50K. I'd probably get into more of them, but just 50K is way easier to pass, way cheaper to start. Better price per drawdown, and the ability to copy trade and keep risk small, was the advantage for me on that. So yeah, but again, like I talk about with a lot of things, I don't think there's any wrong way to do it. I don't think one is just 100% objectively better than the other. It depends on the trader. It depends on, your needs, your goals, the way that you trade, how you interpret all this stuff and how you place value. So yeah, pushing to the upside, man. So we didn't get a pullback to the area that I was looking for, at least to take really everything out to the downside before pushing back up. Outside of that, if we didn't just knife to the upside and continue, I'd be looking at this long. Rusty, great call out. We're going to see if you get these 57.20s. I think we may head towards the 57.10s. That's where I'd be looking, past this level where we might find some resistance. But this was not a setup for me. This is a little bit of consolidation. But as you saw yesterday, I really wait for some direction before I look to take an aggressive trade out of an area of consolidation like this. That's not enough of a pullback, and this is way too big of a risk structure for me to be trading a breakout with a stop loss right down below here. But we are pushing, man, through the 5700s. Aggressive move to the upside. Again, just no setup for me yet. Not even though I apply a lot of discretion, this is just not something that I'm willing to take, although that it would have paid today. Break above overnight high, break above session high, just a tiny bit of consolidation right here, and then something with, a tight stop loss like this. I'm just not a fan. I need some kind of a pullback into this area that we just blasted through before continuation. I think what might have got me into something today is if we had just a little bit different structure, pull back down maybe at least into this area and then a crack above. I'm more comfortable with that as an invalidation point to the upside, trading this as a breakout. On something like this, I think, yeah, we could easily just break out the way that we did, but just as easily, we could wick lower and then continue. And if I'm going to place a stop loss somewhere down here, where is my level of invalidation? It's all the way down here. We could do this, whatever we want, and it would still be clean structure, right? Anything, above this low is technically a higher low. So, for me, just not a way to structure risk, right? So I kind of look at those two things in equal parts. And I articulate it a lot with you guys because I think a lot of people fail to do that. Not only do I have an indication based on price action that something's going to happen, do I have some way to structure risk? Even if I'm going to go for just a one-to-one or look to grab quick profit, do I have some place to place an invalidation point where I go, I want to be out here if price comes back down, and I wouldn't want to be out here if price came back down. So if you took it aggressively off of VWAP, you started getting long down here before that pop, beautiful trade. That's a setup, not bad. If you took it on a breakout, after just a massive, quick, you can see the volatility in that candle, quick crack to the upside for continuation, great job. Just not a setup for me yet. So this looks like we're going to continue. I don't see sellers stepping in anywhere here through this area. Again, I'm looking at 57.10s for the next area of liquidity on Bookmap. Lot of orders up there. It is being overlapped with the algorithmic stuff. Really not much above or below that, but that's the next area that I would be looking if you were looking for a target to the upside. So we'll see if we find a little bit of resistance here, but I don't think so. This just looks super strong, man. Super strong. What happens when we get up here is the next question. Do we blast through to the upside? Do we get a pullback in continuation? Do we just start to turn back down in? Watch this one together. See if we get a trade off the open here. We get something. Long 91.50. Tight stop. Nice, man. Very nice. Very nice. On the 1 minute, I saw a spot. Beautiful. Dude, great job. Great job. First off, great call off the open, man. Just great early call, and then and then great trade. It's nice when it works out that way. I can't speak to what that type of volatility was. It doesn't have to be anything. It's rollover week. It could just be a market participant stepping in. Big buying pressure. But that was a gnarly, quick candle to the upside, ripped through right off of VWAP to this level on a lot of volume, and then we didn't pull back at all. We just continued directly to the upside. So when we deal with price action like that, sometimes it's a little bit difficult to trade, even on the 1 minute. For me, right? For me, obviously not for Rusty. So well done, brother. But yeah, good conversations, good question on the differences between different size prop accounts. If you want to check out straight to funded prop accounts, I'm gonna drop the link in the chat. It's also down below. It's also in the banner up above me. Code RDF at all your favorite prop firms. I just dropped a link to Tradeify. I've been trading them on the back end. I'm trading Topstep here with you guys just because I like the platform right in front of me. I really do enjoy Project X, and I can display everything in real time. You can see entries and exits. With Tradeivate and TradingView, I just haven't figured out a clean way to do it yet. So I'm not trading those with you guys. But you can check that out. 35% off, straight to funded accounts, no evaluation. Different rules, of course, but code RDF for the best deals. Stopped on 10 points on ES. That's my daily goal. Until FOMC, have a good day. Trade well. Very nice, Rusty. In and out. Get in, get out, get paid. Again, guys, if you missed it earlier, if you hopped on late, we have FOMC. I'm going to show this on the news site that I look at, which is Forex Factory. This is the major thing. If you take nothing else away from anything that I say this whole week, 2 p.m., I'd expect an increase in volatility, and I expect that to continue through the 2:30 p.m. scheduled FOMC press conference. I would be extremely cautious around this time frame. I was anticipating a potential for chop ahead of it. We got a nice move forming to the upside, but I would be very cautious trading into the afternoon and even before it. 2 p.m. the rate comes out. Usually price goes wild. 2:30 p.m. Maybe we get some calming before the press conference. 2:30 Jerome Powell starts yapping, and answering questions, and it can be pretty dicey. So I would be aware of that. But so far, man, we are just pushing to the upside. I don't know that I have confidence in a long up here, man. I don't. That's what I'm getting. This would be really really aggressive to the upside. Looking just for simple break and retest market structure. We did get a little bit of hesitation at this zone. We start to come out of this area. Start to come out of this area to the upside. I could see it continuing, you know, up towards the 57.10. It's not a bad level to trade towards. Try to snag 10 points out of this bad boy. This is just not a really clean way to structure risk. Again, guys, I'm not in a trade. I'm just eyeballing. Continuation of the upside, right? We are, you know, above pretty much every objective level outside of prior day high that I have marked on my chart. Structure of the upside, breaking, retesting, VWAP, a lot of volume pushing to the upside, finding some resistance here. We get a very small pullback, but somewhat in line with what we saw off of these highs. It's not a bad one to try, but I think I'm going to keep myself out of this. Main reason is here's where I would really want to be out. This 57.10. First off, I don't know that I want to hold through it, so probably would want to be out right before. We got a boatload of orders on the book up here, and at very best, I don't even have a good risk structure with a super duper tight stop right below here. I'd be surprised if we didn't go and hit this level, but it again just not a good way to structure risk. Even running a stupid tight stop loss. I think a pullback down here before continuation to the upside could easily happen. Just not giving me good structure to trade off of today, which is okay. We'll sit. We'll see what happens. Again, still watching a massive level up here on Bookmap. This is what it's looking like right now, so you guys know what I'm talking about. This is getting overlapped by we had it come off here, and then looks like it came back on. So there's the 411 that were on the book right up here at the 57.10 level. Came off. Algorithmic started to overlap it, but that looks like it came back on. So we're showing like 611, and then you can see the algorithmic stuff starts to come, you know, below it, and there still are orders sitting there. Right now, it is being overlapped by this just algorithmic liquidity provider, whatever we call this stuff. I really don't know the real term for it. But I don't really pay attention to this. I'm looking for, you know, big stacks of orders on the book, like we have something down here. Yeah, we can see it start to come above and below. Ooh, we get it moved down here. Yeah, this is interesting. This is interesting. They're moving this around. Looks like 400 some odd lots is, oh yeah, it's somebody that's moving it down that wants to get filled. Wow. Yeah, so I'm not looking long on this. Let's see if we get a lot of volume to be filled here. Yep. Boatload of volume being filled. Those orders being filled right there. Let's see what we get. Not a lot of reaction out of price though. Not a lot of reaction out of price. Yeah, but this looks like there's still something up here, but just some algorithmic, mostly just algorithmic stuff. Yeah, a couple 150 lots. So we got above price. Whoop, nope, buyer stepping in now. Interesting. Yep. Again, guys, this structure just really not giving me something to trade. This is what I look for in terms of just basic break and retest structure, flowing with the trend. You know, above the VWAP, above the levels that I like to look at, but just the risk structure on how this is forming is just not ideal. It's not ideal for an invalidation point for me, and not ideal just to capture, you know, what I look for here on ES. So Nothing really down here. This would be really aggressive, you know, before even 9:45, before the first 15 minutes to take a buy off of this level, especially when I was anticipating a pullback down to this level. So no setup here. Again, eyeballed this, but you know, if I'm trading this as a breakout, maybe it's like that candle there. That's just not a great place to put a stop loss, right? Not a really good place to put a stop loss. I think super easily we can just, you know, wick back down here, kind of like we wicked up here and then came back down before maybe continuing. But, you know, here we go, paying today. Here's what this would look like. And again, just not a great risk structure on something like this. And a continuation to a level where I was watching a lot of liquidity. There's still some up there, not that much. I would still want to be cautious holding through this, but we may continue. Really just may continue to run, man. Get a lot of bullish movement before FOMC. But yeah, not a clean setup for me. Not yet, at least. We'll see what we start to get here. Just as long, NQ 841. Stop loss and profit 846.50. See money, take money until learn how to use and trust the fib. Yeah, we're talking about the Fibonacci tool. Yeah, I'm not obviously you don't see me using it, but I'm not a big fan of the Fibonacci tool. Just personal preference. I think it's very popular because a lot of people like it, and maybe it can be dangerous if you find a way to utilize it and build confidence in it. Just like really any other technical tool. But the thing that I cautioned against is, you know, if you're looking at something because somebody else used it and it worked out really well a couple times, or they teach with it, and you're looking at it as the holy grail or the answer that's going to provide some, you know, massive result for you, it's probably the wrong thing to go hunting for. There we go, up through the 57.10s, man. This is strong. Yeah, strong today. I'm kicking back on this one and not jumping in, and yeah, pretty much any kind of basic break and retest buy would have paid today. Continuing to push to the upside through the 57.10s. There's a lot of strength out of this market, man. A lot of strength out of this market so far. Again, this isn't a massive move point wise, but it's definitely considerable. Buyer stepped in right off of VWAP or whatever the heck that was from a fundamental view where we had a ton of volume and an immediate push to the upside, and then no real aggressive pullback. So I'm sitting on the sidelines waiting, which I'm okay with. Again, no real beautiful way to structure risk for me yet. I don't know that I'm going to find one. I think this is just a lot of strength showing to the upside. In and out, Ryan taking wins. Very nice. Very nice. Yeah, I'm still looking for the magic wand. But the market's always changing. Yeah. Here's the deal. Here's my thoughts there. Because I went on, most traders go on this journey for a long time. There's no magic wand. There's no holy grail. There's no one thing that will just present this. I never have to take losses. You know, I'm never going to go through losing streaks. Result for you. That's my humble opinion. I think most traders through trial and error stumble upon things that really speak to them, that they really like, and things start to click for them. But again, I think the demonstration is you see so many traders using so many different tools, and there's tons of overlap, but there's so many different ways that guys and girls are making money. So I would really encourage you not to consistently strategy hop or add different tools because you see somebody else using something or something generated a great response one or two times, hoping that you're going to have this massive win rate and massive risk to reward and not have to deal with the difficult, uncertain markets that are just the markets. I wasted a lot of time doing that myself, a lot of time, and I think most people do. Got to experiment, got to learn the hard way to a degree, but you know, that's where I would be cautious. That's where I'd be cautious, for sure. My 2 cents would be keep things as simple as you possibly can. Find stuff that you like, and a way to build confidence and apply some consistency to it in the markets, you know, and that's it. Just build off of that. Create a feedback loop, journal, do a little bit more of what's working, a little bit less of what's not working. Focus on risk management. Focus on the way that you're thinking about trading. If you keep adding tools or looking for a new tool that's going to massively change trading for you, and all of a sudden, you're this badass trader, usually just doesn't go that way. Again, I think you add things and you find stuff that you really like, that really speaks to you. But in my opinion, it comes down to your experience and discretion and how good you are using whatever that tool is, how confident you are, and your ability to read it and apply your discretion to it, your subjective interpretation. That's why everything can work, right? That's why everything can work. Yeah, Fib, I use Fib for TP zones, but really what's necessary is finding the data via backtesting alone, alongside a strategy and system to verify its edge. At least 6 to 12 months. Sure. I've been trying everything since Forex. I haven't found the magic tool since I was so confident with MACD. Market changed, and now I'm doing quick trades, but of course, use it as an entry tool for breaking retest. Don't gamble. Yeah, you're in a difficult spot there. Here's where I would go with it if that's where you're at. I feel FOMO when I see traders giving space to the trades and finish one more profit than me. Yeah, so this is coming from, this to me sounds like it's coming from it's a good conversation. As I'm watching the markets, again, guys, no setup. I know I'm talking to the chat here. No setup. I don't have anything on this. Don't have a way in. You could hit the buy button anywhere and place an arbitrary stop loss. This looks like a lot of strength. I don't have a way in long or short here. So I'll chat with you guys. But to me, this and what I think most of this feels like a way that you're thinking about trading issue. It's probably not your entries. It's probably not the tools that you're using. It's a fear and lack of confidence of giving back profits and not letting trades run. And if that's what you're struggling with, I would start to backtest with low risk or no risk, and forward test with low risk, and build confidence in the system that you're trading. I would incorporate rules and things that you do to let your trades run and allow them to play out in a positive way. And I would also go through journaling and maybe read some of the books that we were talking about in Discord yesterday. We talked about some bangers yesterday. And try to get a good understanding of your emotions and then your responses to your emotions. That's probably what's hindering you in this. And not that some tool is going to magically allow you to do something. You're going to put anything on your chart. You're still going to have the same fear and greed and hope and pain points that you have now. In my opinion, some things might give you some confidence, but it's the way that you think about trading. For the most part. Again, we talk strategy so much on here. We talk about prop firms. We talk about tools, the markets. Here's what I believe at its core. This is the Mark Douglas, Tom Hogarth, Jared Tendler, Steve Ward. This is the same kind of philosophy here. What separates the consistently profitable traders, this is almost the Mark Douglas quote, rest in peace. What separates the consistently profitable traders from everyone else, if I had to distill it down, is it's the way they think about trading. It's their mindset and psychology around trading. It's not that they're smarter. It's not that they have a special tool that nobody else has access to. It's that, and I add in personally, which all those guys don't talk about so much, there is a level of experience. A trader that is 6 or 12 months in, no matter how good their psychology and mindset is not going to have a read of the market and ability to use their discretion and intuition because they stared at the screen for thousands of hours as someone that's been trading for 5 or 10 or 20 years. Okay? So those are the differentiators. Those are the differentiators, for me. There's no magic strategy or system out there. There's no magic strategy or tool. It's going to come down to building an understanding of the markets, an understanding of yourself, an enormous amount of confidence in your system, your strategy, your ability to manage risk, and time and experience. You're going to get better with time. Only going to get better with time. So that is my rant around that. We've all gone through it. I've been at 4, close to 5 years. There you go, man. Understand a lot of discipline and consistency and work to put in up front. And do the work having a system and strategy first. Trading the Zone by Mark Douglas. Yeah, absolutely. Yeah, you guys want good books? You want the book list? Ready? And you guys can listen to this one. We were talking about it yesterday, but I'll rattle off a couple really good ones. First three, without even having to read the list: Trading in the Zone by Mark Douglas, Best Loser Wins by Tom Hogard, and The Mental Game of Trading by Jared Tendler. All of those absolute bangers. You read all three of those, you can keep going. Each of those guys have more books, like The Disciplined Trader from Mark Douglas. Tom Hogard has a couple other free resources, what I wish someone told me 20 years ago. Phantom of the Pits, all that stuff is on his site. Some other awesome ones to read that are based on psychology: Market Wizards. It's an old book. It's interviews with top traders. Very old, but there's new ones. Absolutely amazing book. Fantastic. Talking about the way that you think about trading. Fantastic. Other ones that I would read: Reminiscences of a Stock Operator. It's a fictional tale, but it is a very old book, but really interesting read. Other psychology books. Some of these are not even trading related. Think and Grow Rich. Another really, really old one. It's about your mindset. It's about limiting beliefs. It's about actually believing you can do what you set out to do before you do it. Extremely important. Financial Risk Taking. That one's kind of more technical. I do like it though. The Goggins books, fantastic. Love Goggins. A Man for All Markets, really, really good one. Meditations, not a trading book at all, but really, really good. And then another solid one, towards the bottom of my list, but Thinking Fast and Slow, really, really good one. Hop in Discord if you want that list. I don't think you can do any. Here's how strongly I believe about these books. And I'm not a book guy. I don't like reading, and I don't even read all of these. I listen to them over and over and over again on tape. Not on tape, on audio or whatever it is, as I train. I don't think there's anything that you could do for the next however long that the Book of Five Rings. Oh, that's a good one, dude. That's a good one as well. 100%. Great call out. Yeah, I've read that. It gets maybe it's the masterpiece. Yeah, maybe it's the maybe it's one of the version. I can't. Maybe I'm overlapping two books, man. But that's a banger. That's a banger. I'll just leave it at that. Haven't read that one in a while. Good reminder. I'm gonna have to go back on that one because I like to go back over. First time tuning in. All Roads. That's another book. I haven't read that one. There's a couple people that commented, and I got a bunch more on that post. It was a tweet. I got a bunch more to read, for sure. That's not my complete list, but again, if you haven't read any of these, you don't know what we're talking about. I don't think there's anything better you can do for your trading, and this is just my opinion, than read and take notes on, or listen to and re-listen to and study those top three books from me. Best Loser Wins by Tom Hogard, Trading in the Zone by Mark Douglas, and The Mental Game of Trading by Jared Tendler. I think they are so powerful and provide so many examples of the way that we need to think about trading and reframe our thinking for these markets. I think Trading in the Zone provides a lot of good examples. Best Loser Wins, tells some really interesting stories. And again, they have kind of some differences when it comes to actually like trade management, which they go into just a little bit. And then Mental Game of Trading provides a lot of actionable, solution-focused steps that you can take, which I think is very helpful. It's not as abstract, just kind of talking about it. It gives you some steps that you can take and some things to look at. There's also different concepts in these. Someone was talking about the inchworm concept, working on your C game. Stuff is so helpful, man. But I really think if you haven't read those, you can leave if you want now. Those three are probably going to do a better job than listening to anybody on YouTube or paying attention to another indicator. You will not be a worse trader after reading those. I'm going to go out on a limb and say that. So, but yeah, I appreciate you guys. Book of Five Rings is a banger. I gotta look at that one. Is that the orange cover? Book of Five Rings, like samurai on the front, old. Yeah. Yep. Banger. Yeah, I'm big into the psychology stuff, man. Big into the mindset stuff. You need it in trading, and it will help you in life as well. I really believe that. If you can really lean into some of this stuff, some of the other things that I do, just because we're on this this topic, I do a lot of things outside of trading to build discipline in other areas of my life that I bring to the charts, right? Here's my thought. If you're completely undisciplined, as we watch this market look like we're either going to crack higher or start to pull back off here. Don't have a trade here still, guys. I got no setup. If you come to the charts and you are completely undisciplined in every other area of your life, it begs the question, what makes you think you'll be disciplined when there's money on the line? Why in God's green earth would you think that you'll be able to exercise discipline if you're undisciplined in every other area of your life? So I think it can be helpful to maybe do some hard things in your life that are positive. Maybe exercise, maybe read one of these books if you're not a reader and you hate reading, because you know it will help. Set a goal, small goals, and achieve them. Maybe it's just going on a walk every day. Maybe you do run and you take it to the extreme and you run ultra marathons like me. These are things that you can do outside of trading that I think translate really well. Outside of that stuff, just meditating. Traditional seated meditation for me. I don't do it as much as I would like to. I kind of go on and off with it. But pre-trading, man, you sit down and you just kind of calm your breathing. Think about, and this kind of sounds like the hippie, abstract BS. It's not, man. It's really not, at least for me. You sit down, calm your breathing, think about your internally, turn your thoughts inward, think about how you're feeling, recognize your emotions, really become in tune, and set yourself up for a calm trading session that allows you to be objective and trade the system in front of you. And really think about your emotions and be aware, have this heightened sense of, what you're feeling and when you might do something that's way outside of your system. I think that stuff can be super, super powerful, man. Super powerful. And that might look different for everybody. Maybe it's just going on a walk. Maybe it's journaling, right? Writing out your goals for the morning, writing out your trading system, kind of repeating some stuff to yourself. Maybe it's, positive affirmations. People do that. Maybe it's reviewing a slideshow. Hogard, kind of talks on that. Wolf was talking about it in Discord. Make a slideshow for yourself of just some things to remember real quick. Take a couple seconds to think through it. But some of these processes, man, can be super, super helpful. Super helpful. You want an easy one, go on a run every morning for an hour and listen to your favorite trading psychology book. I promise you won't come to the charts a worse trader after doing that. You will not. Or, maybe you can't run, you just listen to the book yourself. When you're in the car, or you throw one headphone in, when you're taking care of, your family or something. Just some thoughts, guys. We talk about strategy so much. We talk about nuances of trade management and, different tools. Psychology is a massive piece to this. Again, is having great psychology and mindset going to save you from not having any edge or experience in the market? No. And I think there's a lot of pushback on that now where guys say, psychology is BS or, I don't think so at all. I think it's one of the most important things, if not the most important thing. But you still need to have a system. You still need to have a very good understanding of how you're going to manage risk and take trades and trade management and technical analysis abilities, all of these things, right? All of these things. But when I look at what's the hard part of trading, that's the hard part. That's what we're talking about all the time is going on tilt and blowing up, not figuring out which way, the market's moving or trend or identifying a support or resistance zone. That's the easy stuff. The hard part is actually executing when there's money on the line and we're feeling all these emotions. So it's a good conversation. I didn't mean to rant for too long, but this was good. This was good. I have the list of books, and I'm reading right now. Reading one right now, Day Trading Secrets. But as soon as I finish, I'll start with the list. Awesome. Yeah. Again, some of the books that even on that list are less good than others. You might not like a book, right? You might not find it, super helpful. I've read a lot of stuff or listened to a lot of stuff. I try to be like, because someone might say, oh, it's not reading, but whatever. I've read a lot of stuff and not everything I really enjoy. And not every part of the book do I find super helpful. But if I could take a few really important tidbits, I hear something and I'm like, oh, wait a minute. I got to run that back because that's just a crazy good way to think about this. That's powerful. It's really helpful. And I think it can go a long way. So, yeah. You're right. I've been trading since COVID, but only since last year with discipline and respect. For sure. It takes a while. Again, we're talking about all this. There's a level of experience, here that we can't shortcut, can't be bought. Takes time. So, These are great questions, guys. I see we got some more. Hang on 1 second. Looking at just watching Bookmap. We had some up above price. We had 515. Again, if you hopped on late, I know we're having this whole conversation on books and psychology. We talked about prop firms. This is good stuff, though. I don't have a trade on. I wasn't coming to the market expecting anything today. Don't have a setup. Didn't have anything out of this breakout right here. Didn't have anything out of this breakout right here. Both of these would have paid if I had gotten really aggressive. I think on another day, even if I'm correct on direction, I'm stopped before the market moves. So just not a clean invalidation for me. So, no risk put on. And now I'm just kind of hanging, watching the market with you guys. I don't know that I'm going to get one. I could see potential. We're starting to consolidate here. We've obviously lost momentum. Volume's dropping off. We are coming off to the side, failing to break above highs. We have some liquidity right above this level, right at the 15s. We're chopping, really right around this 57.10 level. We're just sitting here. I could see a crack up above, and I don't know if we're going to continue or start to sell off. I could certainly see a pullback down to retest this level. We really blasted off, and I think if we start to come down through these lows, if we're not just going to retest, below these lows and continue the upside, we could quickly come back down through towards, prior lows in this session, overnight high. But so far, this is showing a lot of strength. I don't have a buy from up here. I don't have a sell from up here. So I'm sitting patient. Something might develop quickly. Again, we start to sell off. I may look for it back down into the range, just kind of following that potentially choppy move. But so far, this has been just really clean structure to the upside. Aggressive and not a real good way to structure risk or find a way in for me, but that's what I'm looking at. So I'm gonna hang with you guys for a little while longer. Again, I'm gonna get some forward test scalping in that I've been working on and talking a little bit about, making some back testing videos about before FOMC, but I'm gonna be done. I'm gonna be done looking at the charts by before 2 o'clock. So, this is my opportunity. So I'll hang out, see if something else starts to develop. Cool. So we said, George says, I enjoyed your risk reward question on X. This conversation applies. Follow your plan and discipline. Good stuff. Yeah. So I'm not going to comment on this one yet, George. I have an opinion and a belief, but I'm challenging everybody, and I like to do this on Twitter. And see, first off, it seems to generate a lot of engagement, but I like to ask questions, even if I think I have an answer to one, that are really hot debated topics where I think a lot of people have a misunderstanding or there's some confusion around it. So feel free to hop on Twitter and look at the last post. It's about risk to reward and win rate. Risk to reward and win rate. And I'm curious to see the responses to this one. I really am, because I'm going to start talking about this more, and I think it's really important. Really important, because I think there's a lot of misunderstanding around win rate and risk to reward. There's a lot of focus on it, which is important. We need to have an understanding of these metrics and what we're going to risk per trade, what an equity curve is going to look like, what a random simulation based on our numbers is going to look like, because there's math there that's going to say, do we have a positive expectancy or not based on these average numbers? But there's a lot of talk since I started talking about negative risk to reward stuff. So I'm interested to see. Trading, Ryan says, trading, you got to look at it as business. Got to take it serious as a beginner. 100%. Crude oil inventories in 5 minutes. Okay. Yeah. Got a little bit of, it's probably a yellow folder, orange folder, Ryan. But yeah, that might have been 5 minutes ago that you said that. But yeah, you got to take trading seriously. This is a business. Most traders are not taking it seriously. The vast majority, I'd go out on a limb and say, are not taking it seriously. I didn't take it seriously when I started. Just the questions that I get asked, the things that people are doing, you have to take it seriously. You have to really apply some discipline and create an understanding of what the heck you're doing, and come at it with some discipline, as if you would any business, or else you can't expect it to work well for you. Yeah, my gut tells me we're coming back down on this, man. But we are We are too high up in the range. I would really be catching a top here. I wouldn't mind a pullback up and then a continuation lower for a short. That's probably what I would need. But this is some selling pressure. We're getting wiggly up here, which is a real technical term for me reading momentum. I'm looking at this potentially breaking the downside aggressively. There is some volume being traded for sure. I do think we could just be pulling back before we blast off. We still have liquidity up here right above highs at 715. That I'd be cautious placing a stop below that level. But this feels like we're going to turn. It's really counter for me in this type of structure to take a trade like this. You know, we've just continued. Here's our highs and lows. We're starting to put, you know, lower high in here, now breaking down below this low. So we're just getting a hint of it. Maybe if we chopped a little while longer and we got something like that, and then like some aggressive selling pressure, I would look for a short, but I can't take it from here. My gut tells me short, potentially retesting the 715, but this looks like it might want to go. I could definitely see a test above, and if we came back down through, I would look short on this. Conversely, I'm just not looking long. I'm just not looking long. This might be a beautiful buy entry. We are getting away to structure risk down below this low where you're dead wrong if we don't continue the downside. There's even room down here just to that 15 level if you wanted to be aggressive with it to grab a 1-to-1. But I'm just not looking long on this. I'm not looking at this as an extended day. Not extended day, as a really trend day. Maybe I'm carrying a bias that's not going to help me. Anticipating more chop than we are seeing right here, right now. But I'll be here trading live with you guys, and we'll watch it play out in real time. We'll see how my read plays. Yeah, I'd look at a retest of this level, and then we come down through. I'd be looking short on this. Just kind of getting a feel for what this looks like. Yeah, 10, 11 points wouldn't be bad. Not a lot up here. 150 orders at 715 on the book. Resting orders. Looking at the current order book. Nothing else really major down below price or above price. And again, haven't been having many no trade sessions at all. I've been taking quite a few trades, whether they be winners or losers here with you guys. Again, we get a day like Monday. There's no opportunity for me. I'm happy to not take a trade. More than happy. So let's see. Let's see what we get. Let's see what we get. Give me 1 second, guys. I'm going to grab some water. I'll be right back. Back in action with you guys. Not stutter as soon as I hop on. Watching this market start to turn to the downside. Not getting a retest of that 15 level that I was watching on Bookmap, at least so far. This is looking like we might want to come lower again, just based on volume profile and, you know, what I'm seeing on this chart, I think if we do start to sell off down through the 700s, we could quickly approach the overnight low VWAP, really start to head back down. It would be kind of counter for me to take this one, a little too counter than what I'm comfortable with, unless we had another retest maybe up above this level or just into this area of high volume again, and then a continuation. But we got a little bit of a pullback here, and we look like we want to continue. Again, I don't know that I'm going to try this. This would be a different trade, right? I'm not going to grab a quick breakout to the downside. This would be an anticipation of a larger move. So I'm going to wait for this to develop up here, but I'm looking short on this. Gun to my head, I'm short. You know, back down towards VWAP, back down towards overnight high. Had the read right out of these areas. Not a great way to structure risk. Kind of dealing with the same thing here all session. Not a really clean way to structure risk. Yeah, I'm not going to look short on this yet. I would need something that I don't know that we're going to get. I would need a pullback up here, maybe take out highs, and then a rejection again to confirm that this is not a pullback before continuation to the upside. And this is indeed, you know, sellers stepping in to bring this bad boy lower. We didn't, you know, find buyers and continue right back up out of this area, and we are coming back down to the lows. This could just be a little consolidation before we crack back up. So I don't know that I want to start trying it from up here and get caught in this. It feels weak, but I'd need a sweep above and then selling pressure to step back in before I'd look at it. So we'll wait patiently for that, right? I do want to take trades. I do want to make money, but that comes the patience and the discipline to wait for your setup to present itself, where you actually feel you have some edge in the market, rather than just saying, I want to take a trade, I want to make money. It's 10:30 and you know, I don't have too much time left in my morning session, so I'm just going to take something. That's not a good way to trade. It's not a good way to trade. So initial balance is up here as well. We are more likely to break this level. If we do break this level, we're more likely to continue to the upside and not come all the way back down and crack this level. But I wouldn't mind a crack and then a failure to move higher and then a continuation down. So that's what I'm waiting on right now. We blast higher on this. I'm just, you know, I'm nothing. I got nothing. And if we just sell off from here, you know, I'm waiting for something that may not happen, and we pull back farther. So that's where I'm at on the market. That's where I'm at on the market. But great conversations. Oh, let's see. We got some chats. Boys in the chat, girls in the chat. 1-to-1 equity curve with a 55% win rate is smooth upstairs flow. Mine's 1-to-1 with a 75% win rate. My equity curve is outstanding, and my mental is great. You win much more often, which is stress-free. For sure, man, for sure. Then holding for 1-to-2 and 1-to-4s on managing trades, just in my experience. I think they can all work depending on your win rate, but depends if you have the data to back up your strategy and system long term. For sure, for sure. My trade close in profit, not a lot. I don't think I'm going to look for another entry. Yeah, I got you. A little time for shorts, but I don't like this market sideways. Yep. We are kind of starting to consolidate up here. Wolf, hit my personal daily loss limit. Listen, it happens. Right? You know, we aren't always going to have a winning day. And if you are within your limit, you did everything you're supposed to do. Good job. That's it. You know, we never feel good ending red. But did you do what you were supposed to do? Did you take the setups as they came to you? Yes. And they just happened to not work out today. Market didn't agree with you. Part of the game. Ryan goes for US 30 YM and crude oil inventories red or negative news, selling after news. Cool. YM futures typically have similar correlations. Yes. Yep. When I was in TradingView 2 years ago, I learned to listen to the news for no trade news. Sure, I don't think that's true personally. Don't trade red folder news. Many traders make money during news due to volatility, but you got to know what you're doing and have the back-tested data. Yeah, so again, man, like, here's my thoughts on news. We'll kind of talk about that just for a second. News is difficult to trade for most traders, and I would say most don't make money during news. I'd say more money is lost attempting to trade news than is gained. And here's why. It's not that the market's any more unpredictable for in my humble opinion, the way we would describe predictability, whether or not it's going to go up or down. It's the volatility, and it's the uncertain increase in volatility, right? We don't know how much volatility we're about to see. So that can be really difficult to work with when it comes to structuring your trades and sizing. So I think it's not that a lot of people get the direction wrong, you know, after news or anything like that, but there's just so much volatility to work with. And it can either be that you're not sizing down and widening up stops and targets enough, or it's just such a rapid change and uncertain volatility that can be very difficult to work with. So, but yeah, there's plenty of traders that are momentum traders, really aggressive scalpers that, you know, are going to work with news and make money. So for sure. George, looking for an NY Open VWAP bounce from the 800 to 820 zone on MNQ. Got you. Based on crude oil inventories, selling news. Got you. True used to make money in the NY Open. Just reading some of you guys in the chat. All right, we're gonna look at MNQ for you guys here. Very, very similar structure out of NQ today. A whole lot more of a crack back down below here. But this looks like we want to come aggressively through these lows. Maybe a crack back up here first, but on ES and NQ looks like we're coming down through. On the 2-minute on NQ, I shorted at 866. 1018. Let's see. Let's look at it together. Oh, we're hanging out because I don't have an entry right now. You got short on 1018 at 866.5. Wait, I'm sorry. 866.5. Oof. 866.5, and your stop was right below that bar high, right? You got ticked out. Yeah, it's a tough one. That's a tough one, Wolf. That's a tough one, Wolf. That's a very frustrating one. It happens. I don't think the market's out to get you. Is that a spot that the market might go to before continuing to the downside? Unfortunately on a day like today, yeah. But that's a very frustrating one, man. Very frustrating one. I'd probably lock it up after something like that happens. Again, you guys watch it happen with me live, right? If you go back through, I had a trade get within... Yeah, we're selling off aggressively through this. I had a trade get within one tick of my take profit, come all the way back to my entry, and stop me at break even by, I think it was 3 ticks, before continuing all the way back through my take profit and to the upside. If you find that happening a lot, it begs the question, are we putting stops in really obvious places? Are they really not great in validation zones? But also, it's just going to happen sometimes. You're going to get ticked out. That's a frustrating one, though, brother. It's a very frustrating one. Please tell me the market isn't out to get me. Yeah, the market's not out to get you guys. I promise you. I promise you the market doesn't know where your stop orders are or where your entries are. And if it does, we're way too small fish in the pond, man. We like they're not hunting your stops, especially not here on a sim environment in a funded account. It's not happening, but it's frustrating nonetheless, for sure. There were an anchored VWAP on the low of day as well. Yeah, let's see what that looks like. I know you were looking at MNQ, but just for fun on ES, there we go, starting to come through that. There's our low of day anchored VWAP. If we threw it off of NYSE session, we're testing that right now. Yeah, yep. On the 2-minute chart. Yeah, oh yeah, sorry. We read that already. Shorted. Yeah, come on. The market makers put a bug in my computer to check my stop. Yep. Yeah. Don't get caught thinking that though, Wolf. Don't waste energy on that. Ryan says, told you in all caps. Ryan, I'm glad you have something based on fundamentals that works very well for you. I am glad, my brother. That is a good call out, man. Good call out. Glad to see that you have something working there. For me, personally, I've never been able to do anything with any accuracy or edge looking at fundamentals. There's just not enough consistency in the way that the market interprets the news, whether it's supposed to be good or bad, whether it's above or below forecast. There's just been so many times in the past when I really tried to study it that the market would not do what it's supposed to do or do what it's supposed to do, the change in volatility being too difficult to deal with, and just for all those reasons, I don't utilize it in any other way outside of saying I think there's about to be some volatility around this time. I think we're likely to see a larger candle on whatever chart that we're on when this news hits, and I can decide to trade through it or to stay out of it, to trade after it. But that's pretty much it for me. But a lot of traders utilize it, right? They utilize information around news events, around different data releases, and that plays a big role in their trading. So I am not disputing that by any means. So awesome. Yeah, man, this is a sell-off right back in. My read, not trusting longs. I don't know that it helped me because I could have grabbed some 1-to-1s here, but all the way back down into this range. Again, was waiting for more of a wick out type of move before continuation lower, rather than just this kind of nice, calm, return to the downside. This wasn't bad as we started to sell off here, but again, just not a trade that I'm going to take out, breaking out to the downside like this every day, because it is so counter to the trend. So I'm just no setup today. At best, that's what I'd be looking at. Maybe as we start to break down through this low here, maybe I'm not grabbing it there, probably grabbing it somewhere down here as we really start to get momentum. Stop all the way up here where we have liquidity that I was cautious about. Just not the structure that I need to trade, right? Other days you will watch me put on multiple trades, 2-3 trades. I'm getting clear structure. I have clear way to set up my trades, to set up risk, and just don't have it today. Watching what happens down here. Maybe we get a pullback and then continuation lower, but I don't know that I'm going to get a setup. But good conversation. I have the data for it. That's all, not guesswork. Absolutely, man, for sure. For US 30, but all the indices are similar. 12 months data gain behind the news. I don't trade it due to my 1-to-1 system, but just get information for me to have. Awesome, brother. Yeah. Again, so many different ways to make this stuff work, man. So many different ways. Back test it, gather data, look at pattern recognition, and utilize that to your advantage. And again, different stuff is going to work for different people. For me, trying to interpret the news didn't work at all. For others, probably even more traders, probably the majority of traders are going to use it in some way, right? Fundamentals, going to work to their advantage very, very well. For me, it's another layer that I was never back testing with, and just did not help me. Created unhealthy biases and never worked well for me. But again, personal, right? So I don't mind. I think if more traders just kind of had that view of things, like what works for me is may not work for you. Things that help you or me may not help each other, and vice versa. But I'm well aware that a lot of traders use news. And just fundamentals in general. Yeah, pulling back up on this. Yeah, I don't know what we're going to see here, guys. This feels like the sell back off and kind of chop around. We could recover to the upside here and push off. I don't have anything on this. So I'm not journaling any of this stuff as missed opportunity. Quick knife on a lot of volatility to the upside. Could have hopped in here somewhere, maybe on another day that's not FOMC and I'm carrying a bias, maybe. I hop in on something like this, but probably not. I had targets at 57.10 that I was cautious of after we got up here. This type of structure, I'm really not looking long on with a stop loss way down below here or super duper tight below here. No real clean pullback to indicate that we took everybody out before starting to turn short on a bullish day. That doesn't get me in, so no trade for this one, which I'm okay with. So on that note, guys, I am going to wrap it up here. I'm going to drop this link one more time for you guys. This is my one link to rule them all. This is access to my 100% free trading community to join me here across socials, and all the links to prop firms, software companies that I work with, and some podcasts. So appreciate you guys for hopping on. Thanks for being here. Be live the rest of the week and almost every other dang day here, 100% free. Trading with you guys on YouTube, 9:30 a.m. Eastern. Trade safe the rest of the day. 2 p.m. news. Be real cautious after coming into 2 p.m. Real cautious. Remember, guys, I'm not a financial advisor. None of this is financial advice. I'm just an idiot from YouTube. Trading's risky. Most traders lose money. Do your own research. Make your own trading decisions. Read CFTC Rule 4.41 on simulated trading, which is what this is, even in funded prop firm accounts, and the affiliate and partnership disclaimer that says I stand to make money from links in my content. Appreciate you guys. Talk to you guys soon. Thank you. See you guys in Discord. See you guys. This was a great chat today, man. Great chat. See you guys in Discord. See you guys the rest of the week, man. Thanks for hopping on.